Thanks, Paul and Senator Heitkamp, for involving us in this presentation today. We've been very involved in the Affordable Care Act and trying to get information out to small business owners ever since the law was passed. We feel that it's important that they become knowledgeable in how it's going to impact their small businesses. But a couple of weeks ago, we went around the state with John Hart, who's our regional advocate out of our Denver regional office. He was looking at issues relating to regulatory compliance, and the Affordable Care Act was, of course, primary. And so we actually stopped and visited with some small businesses and talked to them about it. And I think, as Chuck pointed out in Kaiser's survey, the most revealing point that I found in visiting with the small business owners was they don't know. They don't know. They just don't know if it's good, if it's bad, how it's going to impact it, and these types of things. So we were kind of looking for, and I'm going to try to keep my comments brief, because what we're looking for is information from you or discussion points so that we can understand how to more effectively respond to the needs that small business owners have. I'm going to talk just basically about the small business health care tax credits. And as a CPA, I'm all too familiar with the advantage of tax credits. Tax credits, of course, if most of you are aware of it, are just a reduction of your tax liability. So if you get a credit for $1,000 and you owe $1,000 of federal income tax, you don't have to pay it. It's offset. So it's an extremely beneficial aspect of this law that came into and has been in effect for a couple of years already. The tax credits, though, apply to a fairly narrow but important to us segment of this market, and that is small private employers. And this is kind of an area where it becomes kind of confused, because when you look at the mandated employer mandate for paying under these, it relates to firms that have 50 or less full-time equivalents. Well, the tax credits apply to firms, or the firms are eligible for tax credits if they have 25 or less. So sometimes it becomes a little bit of a confusion. From 2010 to 2013, you get a 35% of your health care premium payments in the form of tax credits. In 2014, this increases to 50%. I'll give you a little bit of an idea of what that would mean as far as costs. This is not only available to small private employers, but also small tax-exempt nonprofit employers as well. They have a reduced percentage in that from 2010 to 2013, there's a 25% credit for the small tax-exempt employers, and in 2014 it increases to 35%. To give you a little bit of an example of what that would mean, that if you were a small private employer and your health care premium payments were $80,000 a year at 35%, that would mean that you could deduct from your federal tax liability $28,000, which goes a long ways to offsetting the cost of providing this very valuable coverage to your employees. From 2010 to 2013, which is 4 years, 4 tax years, which includes the current one, a $28,000 credit each year would mean $112,000. So it's significant, and it has to be reviewed and considered. At a 50% tax credit per year, this would be on $80,000 of premium payments. This would mean a savings of $40,000 a year in credits. Now, the thing is that the tax credits, when they increase in 2014 to 50%, it's for 2 consecutive years. So you can apply the credit for 2014 and 2015 if you elect to take advantage of the credit. For small tax-exempt employers, nonprofits, this would mean that on $80,000 a year premium at 25%, they would save $20,000. So it can be significant. The credit can be applied to the alternative minimum tax liability, so that's helpful. And if there is no taxes owed, you can either carry it back or carry it forward to other years. And as they mentioned, I used to be in a small business, and when I was in business, they had the federal government offered the investment tax credit, which was a stimulus that encouraged you to purchase equipment, gave you a tax credit for that. And in fact, I was relatively young. I was 24 years old when I first went into business, and hadn't had a lot of tax liabilities over the years. And when I used that tax credit and carried it back, I received all of the money I'd ever paid into the federal government back in that first year, which went a long ways to offsetting the cost of starting up the business. So these tax credits can be very beneficial. In this case, it can provide a significant benefit. In addition to the credit, you still get to take a partial deduction for the insurance premiums that the employer pays. So, as any other business expense, you can deduct it if you're paying a part of the premiums for your employees. And in this case, even taking the credit, you reduce the deduction, but you still take the rest of the payment that you have for these premiums, and you deduct it as a business expense. For tax-exempt employers, nonprofits, where you usually don't have a tax responsibility, you can actually receive a refund. So, this is it provides some additional cash back into the organization that you can use to offset the costs of these premium payments. As I mentioned, eligible small employers have to pay at least half of their employee premiums, and they have to have fewer than 25 full-time equivalent employees for the tax year. So it is different from some of the other full-time equivalent standards. You have to also pay an average annual wage of less than $50,000 per FTE. It's a graduated scale, and then this is where I don't want to provide some misinformation, because we always say up to 35% credit or up to a 50% credit. But to get the full 50% credit or the 35% credit, you would have to have a very small firm that employs up to 10 employees, and the average annual wage for these employees has to be up to $25,000. So what this says, and I provided a handout to you, and I think it articulates it real well in the handout that we have, is this tax credit helps small businesses afford the cost of health coverage for their employees, and is specifically targeted for those businesses with low and moderate income workers. So you get full advantage of this credit if you have the low to moderate income workers, and you're a very small employer. And there's a graduated scale. I got kind of a handout here, but you can see that it's not something that you can in a short presentation provide a lot of specific details on this. A few rules that go along with this: the employer must provide a qualified health insurance coverage, comprehensive health care coverage for medical care benefits from an insurance company or other entity licensed by the state. Things that don't qualify for this credit is if they provide accident or disability only or liability only policies, workers' comp, and a few things like this. So there are some exceptions. As I said, there's new rules that take place in 2014, which provide a maximum credit of 50% for small employers and 35% for tax-exempt employers. The new rule in 2014 is you are required to purchase your coverage through the shop or the exchange. As I mentioned already, it can be claimed for 2 consecutive taxable years, and there is a cost of living adjustments to the average wage in a phase out on this. A couple of other things as far as rules: who's covered, employees who perform service during the tax years. Who's not covered under this is the owner, a partner, shareholder of an S corporation that is owning more than 2% of the corporation, owner of more than 5% of other businesses, and family members. So I was interested and looked at this credit because my wife still owns a small business, and our son had worked for us, and he didn't have affordable health care coverage. And I was looking at this credit and was a little bit disappointed, I guess, that it didn't extend to family members that were employed in the business. But that is part of the rules that cover this. You calculate this by you or your CPA, your accountant, your tax preparer, filling out a Form 8941. You can get this information on the IRS website. You include it as the amount as a part of your general business credits on your income tax return, and tax-exempt organizations include the amount on line 44F of the Form 990T. So in most cases, you may not specifically be concerned about this, but I think you have to build an awareness of this so that you can discuss it intelligently with your CPA, your tax preparer, and do some pre-planning, because this is going to affect your tax liability at the end of the year, and you want to make sure that you're not paying in more than you would be required to pay in. Again, in summary, under the rules of the tax credits for small business health care, the employer must pay at least 50% of a self-only rate for all employees that are enrolled in coverage. The average wages have to be less than $50,000. You have to have fewer than 25 full-time equivalents. It's fairly easy to claim on your tax returns. The private employers use either the Form 1040 if they're self-employed, 1065, 1120, or 1120S, depending on whether they're a corporation or a partnership. Of course, tax-exempt organization use the Form 990T. For more information on this, and the IRS has done a really good job of providing some information, some examples that are understandable. You can go out and get more information on this from the IRS website. And on any of these healthcare issues, and it's already been brought up, is the availability of some great information on healthcare.gov, irs.gov, and the Small Business Administration at sba.gov/healthcare provides information on the healthcare law, the Affordable Care Act, as it relates to small businesses. I'm looking forward to hearing some interesting discussion. I appreciate your time. And the SBA is very interested in how this affects small businesses. And in fact, I go back and do a report, and I have to provide information up the ladder through the administrator and to the administration as far as what questions and issues are people concerned about, small business owners concerned about, concerning the Affordable Care Act. So we're very interested in it. We want to help you. You can always contact our office by calling, email. If you go out to our website, there's a listing of the district offices and gives you an access point. So I appreciate your time, and Paul, will give it back to you.